South Africa's Standard Bank is looking to expand its operations into francophone West Africa. The company on Monday launched a new subsidiary, Stanbic, targeting corporate and investment banking clients in the Ivory Coast. The move is inspired by a wave of Chinese investment in the West African nation, where China has committed over $7.5 billion over the next few years to invest in infrastructure.
By virtue of our relationship with the ICBC, we think we're in a position to provide advice, structuring, and the capability to deploy the resources necessary to get involved in that infrastructure.
The Industrial and Commercial Bank of China, ICBC, has a 20.1% stake in Standard Bank. This should make it possible for the South African lender to mobilize financing for China's African partners. Ivory Coast, the world's largest cocoa producer and an agricultural commodities powerhouse, is experiencing a post-conflict economic boom driven by infrastructure investment, which has drawn Chinese attention.
Côte d'Ivoire is growing at 7% and is likely to grow at around that rate for the next couple of years till 2020. And banks grow off the back of GDP growth. And therefore, GDP, financial deepening, you've got the stock exchange here, therefore equity capital markets, and you've got developments in the debt capital market.
Standard Bank invested over $100 million in the Ivory Coast alone in 2017 to set up its subsidiary known as Stanbic. The Ivorian economy has since the end of the conflict in 2011 expanded by an average of 9% between 2012 and 2016 and by 7.8% in 2017.